Welcome back to Synaptic, and today we are going to be doing an interesting feature on the system, which is what we call the dealer payout portion. Now, when policies come off risk, they become, in our system's life, expired. And at that point, you are allowed to then claim back on a variety of different fees or whatever the balance is left within that fund. So as the burn ratio is determined, you are going to be claiming back either a positive, in other words, you have not burnt on the policy, or a negative number, which means you may have burnt on the policy. So what we're going to do now is we're going to have a look and see here that we've got a particular policy. So this particular product of mine has unfortunately expired. So what will effectively happen here means we can now go and draw back or pay into the fund whatever the balances are standing on this. So we can now go to accounting, we can go allocate profit withdrawal, and now I'm going to choose my dealership. So Llewellyn's Motors. I'm going to hit search, and we're going to see here that we have a profit withdrawal on this thing. Now, you are normally going to have 8 or 9 or 10 or 15 per dealership, depending on the number of sales in the dealer. Now, as I said here, the issue that we have here, this one is a negative 21,000 Rand because there was a very large claim on this particular policy. And you'll see that in our claims video when I take you through that. And effectively what's going to happen here now is you have made a loss. You have a negative burn ratio on this particular policy. So what this is going to do is going to claw back from somebody the 21,000 Rand. Now, as discussed in my introduction to Synaptic video, and where we talk about the fund and the fund as an overall unit, we cannot judge funds on one policy alone because that's not equivocal. We need to have a look at all the policies that this dealership has sold, and we need to have a look at how do we reclaim that. So effectively what's going to happen here is that you will find that as this dealership grows, this negative will be consumed by the positive values that are laying there. And this is why we say to everyone, you need to ensure that you get a good penetration rate within the dealership. You need to make sure that you're selling as much product per vehicle as you can. So when you're looking at the profitability of a dealership, you're looking at two different factors. Okay, so that would be number one, the average number of products sold per client. You're looking at the second factor then, which is going to be literally the penetration rate. So that means if you've got a penetration rate of 20%, it means that 20% of the car sales that you have warranties attached to them. You want to increase that as much as possible to obviously create a turnaround in what we're seeing on the screen here. Now, on a healthy book, and one that is not demonstrated to its absolute maximum extremes, you're going to see 20 policies here. Some will be in the negative space, like this one will be, and some will be in the positive space, so that it'll all balance out, and you should technically then get a positive feedback or a positive result at the end of the day. Now I'm going to process this one so you can at least see what happens here. We automatically fill in the amount to allocate so that you can see what's going on. Allocation successful, and off we go. This will now create for me a report to say that you've allocated these profits. You can then present this report either to the dealership, or you can present this report internally so you can do your internal split. Now, one step further. Have we gone into the initial earnings setup and we have saved for a particular dealer target? We'll be able to actually on that report show what the dealership percentage split is versus what you retain. So remember, when you're doing a dealer allocated payout, this screen that we're seeing at the moment is going to show what we're drawing out from the fund. What's then going to happen is on the report, and if you set up your initial earnings correctly, you are going to then see what is going to be amount or allocating to the dealer. So this is our dealer profit share report, and in this report, this is my simple one, it is the base report, but when your allocations are set up correctly, at the end of this report you will see here amount to allocate is 21,000. You'll then see dealer's portion and retained portion, because you are only going to pay out on either a 60-40, 70-30 or 80-20 split. And that is usually either before or after interest, depending on your contract with the dealership. And I think in most cases it is on the balance of the fund and not the interest. And the retained earnings are what you're going to keep as a retained profit within your branch for that period that you are doing this allocation. Now, this particular one will say for the dealership Llewellyn's Motors, you'll have all your policies listed here, and when you go amount to allocate, and you'll see the retained and earned portions at the end, because you've set this up correctly and not like my test platform, you will then see how much each person is going to get. You can tally it at the bottom and say, right, Mr. Dealer, here's your report, this is what you've earned. You could also from here derive various business intelligence and say, right, if we had done this profit percentage, or if we had done this sort of penetration, or increased your products per vehicle, so you're selling a tire product, a warranty product and a top-up product, you would have earned X amount of money more. So this is wonderful for that sort of analysis. It's also a nice little statement of what the dealer is going to get at the end of the day. Now, should you not want to utilize this feature, we do still suggest that you give us a list of all the profit share that you're pulling from your insurer, so we can push that into the system, so that when you go into your fund reporting, so now let's do that. Master reporting, thank you. We are going to go pull a fund report, and we're going to pull a fund report on all things, but for this dealership, Llewellyn's Motors. Okay. Now, hopefully this won't take us too long. We want to pull our underwritten product and generate the report. So when you pull a fund report and your fund report displays for this particular dealership, what will happen is when you go down to the bottom of the report here, you're going to see all the burn ratios, etc., etc. Now, on policies that are not expired, so in other words, you're going to see here we've got 2 pending platforms. Okay, so those 2 policies there are pending. How do I know this? Is because I've earned no premium on them. Okay, the unearned premium is still very high. But when you have a look at the final pull, now you can have a look at what we burnt to. So we only pulled 4,600 Rand from this policy. We only claimed 29,000 or 25,000 ex VAT, which means we were left with a negative 21,000 Rand ex VAT in order to pay the dealer back. So when these 2 policies are incorporated and are earning money and there are no claims, you could minimize that amount. But what it does is that this column AO will represent anything that's payable on expired policies. So you could say to the dealer, listen, if you take this fund report and you add this all together, what you'll be able to see there is what will be coming to you in the near future. But you can then also say AP, and if you've done this correctly, you can say this is what we've paid the dealer already. So you can do a comparison as to what the dealer has earned in a third earning capacity, not only just on upfront earnings, but over time with fund expiration. So this is a very nice situation to have. And once you've done that, you can actually do a breakdown per dealership, per insurer, per cell, as to what has been earned, what is burned, what has gone right. You can even do comparisons between what you have done as an earned premium versus what you've paid out to get a more refined loss ratio on that particular fund that you can determine. So this is basically how that feature works, and we really do urge that you use it because it will certainly help in the future or going forward in the future with your dealer earnings. Remember that the amount shown here is what is drawn out from the fund, not necessarily what the dealer has earned. We are happy if you do set up the initial dealer earnings correctly to add in a new column here for you that will then show dealer earnings. Then we can derive those features from it. However, that's a feature that needs to be activated and sorted for you for each dealership that you do run, and you'll need to just spend a little bit of time updating that to make sure that the earnings are correctly pushed in. It also means that if an earning changes or a contract changes with the dealership, you will need to obviously rectify that too. I hope you've enjoyed this video. Thank you very much for your time, and we will speak to you again soon. Good Goodbye.